and welcome to Alternative Thinking. The podcast today is going to focus on the evergreen EIS funds, and we're delighted to have guests Mark Bower-Easton from Oxford Capital and Andrew Aldridge from Deepbridge. Welcome to you both.
There's no right or wrong rule to this, and what we see across the marketplace is there's some charge to the company, some charge to the investor, some charge both, and that's just the way it is.
Using partly consumer duty as inspiration when it comes to offering clients value for money, offering them clarity on what the lifetime cost of an investment should be, we took the decision to basically evolve our fee structure from start to finish.
And I think the work that GrowthInvest have done to bring transparency to the market has been well received by the market, particularly by advisors. So I think that's, I'll say well done on that first and foremost. And I think one of the biggest things over the last couple of years has been the lack of private equity coming in at a later stage. So if our companies might do 3 to 5 million under EIS, at some point, if they are highly scientific, they're probably going to need a 10 to 20 million pound check at some point to get them through to that exit point. And that cash really hasn't been there over the last couple of years, or it's been a lot harder to source. We're starting to see green shoots now. We're starting to see things come back through. So I really do think the next 12, 18 months
it's quite exciting,
really
isn't it?
exciting.
Yeah.
I think that EIS, it didn't escape, totally.
No.
Only the first £1 million now that qualifies fully for business relief, but only having a 20% tax rate as opposed to 40 on the excess it's a pretty good compromise for us. So yeah, I think we're in a pretty strong position.
I think tax-efficient investments as a whole are definitely got to be front and centre for advisors. A lot of advisors, really good advisors, are having to unpick certain things they've done over the last maybe 15, 20 years with clients, because they've done exactly the right things over time, but now the goalposts have moved. So actually, EIS to extract capital from other sources can be hugely powerful. And then business relief propositions, etc. on the back of it.
To hear more, please like and subscribe to Alternative Thinking from GrowthInvest on YouTube, Spotify, and wherever you get your podcasts. This is a promotional podcast for EIS Platforms Limited Trading as GrowthInvest. Any comments made or opinions expressed in this podcast should not be construed as investment advice or a financial promotion. Startups and early-stage businesses are high-risk investments, and you are unlikely to be protected if something goes wrong. Don't invest unless you are prepared to lose all your money.